Test, test, test. Awesome. Hello, everybody. This is Silverbusters. This is my first time doing a live video, so if I don't know what I'm doing, please forgive me. But today is coming down to a few very short days left until we enter the delivery period for silver on the COMEX. And the internet has been abuzz about the speculation if COMEX is actually going to be able to hold on to the number of contracts that are outstanding. Now, in the past, we've had, times where there were tons of contracts outstanding, and as you get closer and closer to the settlement date, those contracts end up, being covered, and it's not a big deal, doesn't happen of it. There's this repeated pattern where we see a slam down in the later stages of the COMEX delivery patterns where, it just happens that, the last couple of days before contract settlement, the price gets slammed down by $2 or $3 and all of the options are worthless. And then, as soon as the risk period has started, then has gone past that, you end up just seeing the price recover after the danger period has passed. But what I wanted to share with you guys today is there was this awesome data dump that was on WallStreetBets today. The guys from Wall Street Silver are still doing their best to try to get the information out to the broader public, or the degenerates, as the term has been adopted, to get that out there to as many people as possible. And so this was just put out by the Happy Hawaiian. He made one of the original data dumps that was on WallStreetBets far earlier back in the GME saga, and we were like, hey, if you actually want to achieve something, why don't you look at silver instead of GME? And like he's saying, we're not telling you to sell your GME. This is just going over the silver process. And so if you haven't seen it and you want to read the whole thing, it's on WallStreetBets. You can search for the Happy Hawaiian and you can probably find it quite easily. But he goes down and gives the big points as to why this period of time may be a very explosive period of time for silver. One is there's an old coot named Cliff High, and if you don't know who he is, he's a little bit more of in the woo conspiracy kind of world, but he for, I don't know if I want to say decades, but I think it was for decades, ran a predictive linguistic software that would measure the emotional content of words in order to bring out periodic events. He could tell by how stressed out people were essentially when big events were forthcoming, and he's been pointing to the next couple of days as being one of those periods of days. So maybe you're into that stuff, maybe you're not into that stuff. I just wanted to add that in there, that we're kind of getting the alignment of financial people and woo-woo people and conspiracy people, and they're all kind of focusing in on silver because seems like something's going on in these markets. And the one big thing that shook me up is they had that clip of the guy from CNBC saying that SLV is shorting the market. That the ETFs are the shorts. I was like, wait, what? The ETFs are the shorts? That silver doesn't belong to them. They can't short that silver into the market. And that's what we've been saying all along, as these kind of scams are going to eventually come crashing down. And this is really what he details in here. So he goes into his 4 categories: evidence for the silver short squeeze, why the hedge funds are pushing silver narrative is BS. That was a big thing that we got from the GME people, is that, you're just trying to get money for hedge funds. It's like, no, listen, no matter what side of the game you're on, there's going to be hedge funds on your side. So don't even think for a minute that there aren't hedge funds on both sides of every trade, because there are. But we'll see what his argument is too. The fundamental case for silver and the TLDR, which is too long, don't read. So he gets into the short squeeze, and he uses 573% of the float is currently sold short, and he's using COMEX numbers there. Now, there's other aspects that we could get into if we wanted to, but he's just using the COMEX numbers. And when he gets in there, like I said, here's the 100 and 250 to 1. But basically, he goes in here, he says, based on the fact that next 3 months, futures and options have the right to take 874 million ounces of silver. And this is compared to only 147 million ounces of registered silver on the COMEX that could fulfill these deliveries. And he says, as comparison, the GME short squeeze, there was only 100%, 140% of the float was short. And they were able to drive the price up to crazy high levels in that kind of situation. So and this is kind of conservative for silver, if you ask me. This is just using COMEX numbers and not getting into any other kind of complications. That if GME could go from, what was it, in the 20s to over 500 at one point, then this short squeeze in silver should be even more possible with that kind of setup in the short interest. And we know if you haven't gotten the kind of historical background in this, like, well, why would they be allowed to, for such a long time, get away with the game in silver like this? It's because everybody in the world is on fiat currencies. Everybody is on just paper money. And the power players that print paper money don't want various alarm bells going off that the whole paper money game is worthless and you need to get out of it whatever way you can. And one of those alarm bells is both gold and silver and platinum and precious metals in general and farmland and commodities and all these other things. Because if you see those rapidly going up in price, you know that your currency is about to go Zimbabwe or about to go, Venezuela on you, where you need millions and millions or trillions of notes just to buy one loaf of bread, right? So the government has a vested interest to look the other way while these big players manipulate the price of silver down. It's like, well, why would they focus on silver? Well, silver is a lot smaller of a market than gold. Almost all the gold that's ever been mined has been held on to. It's stored in vaults, it's saved, it's traded between one group of people and another group of people, but it's never consumed. Whereas silver has been consumed steadily, I'd say, starting around the World War II period, the rise of electronics, the centrifuges used to make the atomic bombs during the wars were used. Electromagnets were needed to run those centrifuges, and they needed silver for the hyperconductivity that they have in order to run those kind of superconductors. So silver just kept getting more and more consumed, and all the silver coins, they were taken out of the currency in the 60s. 1964, I believe, was the last year in America that you had silver in the coins. And more and more of silver was just being consumed by industry. Photography for a long time was consuming massive amounts of silver. And now we've got EVs, the cars, electric cars and solar panels, things of that nature. They're going to consume a bunch of silver. And the amount of silver that is used in each one of these is really small, practically speaking. So when it comes time to throw away the motherboard on your PC or your smartphone, it doesn't make sense to try to harvest a tiny amount of silver back off of the motherboard, that's running the pins or the connections or something like that. So you end up with a situation where there's not very much silver available above ground compared to gold. So that's why oftentimes you'll have people who know the markets tell you that silver is the Achilles heel of this market, and that silver would be the first to go in any kind of situation where you started to see a massive loss of faith in the fiat currencies. So that's why the manipulation is strongest in these markets. And that's why you can see something like this 573% of float just on this one measure, which we know if we were to get into other areas, that would only get more extreme. So, that's one of the setups. And he goes in here, he's explaining COMEX is a silver bank and it's a bank run scenario. If you've seen A Wonderful Life, It's a Wonderful Life. Basically, everybody runs into the bank and demands their money out, but it's already lent out. They only keep a small percentage of what they have on hand. And that's what you could potentially start seeing in the silver market here. So we've got that means the COMEX would default and settle their contract in cash, and nobody wants cash because if the price keeps going up and up and up in silver, they're not going to pay out that cash, because if your contract ends on a Monday and they can't deliver your silver and you have to try to find some way to get silver, well, whatever price increase you get on Tuesday isn't going to apply to you. People don't want cash settlement in these situations, which would be a default in the COMEX. And so you see this is over my head, but basically, let's see if we can get to something that I actually understand. And that's why I'm saying you might want to come in here and read this yourself. Silver's market is delivered in meaningful quantities, blah, blah, blah. Basically saying like if even a small fraction of the people who have these outstanding COMEX contracts stand for delivery, we're going to see the COMEX break this time. And yes, a lot of the outstanding contracts will be covered, but it only is going to take a portion of those contracts remaining to stand for delivery in order to break the current setup here. And we might see some kind of shenanigans from the government or from regulators or these exchanges. Just like they tried to change the rules on the whole GME situation where you couldn't buy silver, you could only sell GME, you couldn't buy GME. We might start to see the same kind of breakdown in the silver market because they just don't have the silver available. And so this is this is the open interest. This is kind of showing you the normal pattern of how contracts close out as you get to close to the end of the month. Let's see here. What else are we looking at? Oh, they'll just find more silver. This is where critics say short squeeze. Sorry, The primary stores of 1,000-ounce bars are the LBMA and the COMEX. And the COMEX starts experiencing high demand for gold and silver. Premiums known as backwardation. And this occurred. Okay, so if I'm trying to... Essentially, what they've done is exchanges for physical, which means, let's say you stand for delivery for silver on the COMEX. Well, instead of delivering your silver, they would give you a promissory note to the LBMA, which is in London, which is where the big ETFs have their vaults. The big ETFs have most of their silver there. And so you would get a note that says, well, we don't have it, but the guys in London have it. They'll get it to you. And this has happened before many times. And that's where the whole, oh, there's a billion ounces of silver narrative in London, don't worry about all of this narrative came from in the past. But as we had covered in one of my past videos, and if you haven't seen my last one, you might want to read that. There was a report by an analyst from Bullion Star, and they went over it and they said, hey, 85% of this silver that's in London is already accounted for. It's already owned by the ETF. So if there's more inflows to an ETF, they can't buy that silver again. It's only that remaining 15% that's even available in London. And then the question you have to ask is that remaining 15%, who owns it? And if those people own it, at what price would they want to sell it? Do they want to sell it at all? Or would the price have to go a lot higher before they decided to sell it into that market? So there's a lot of 1,000-ounce bars available sort of thing is complete BS. I've heard numbers from people now that 1,000-ounce bars are trading at $1 to $2 premium over the spot price already. And that's unheard of. It's like, yeah, if you buy 1-ounce coins or something like that, you're going to pay a premium. Back in the good old days, you could get 1-ounce rounds for 49 cents over spot. You could, more recently, I got Silver Philharmonics, Austrian, official government coins for $2 over spot. That was before this last kind of leg of the crisis started. It may have been a couple months ago, but still, that puts it in perspective, is that these big, bulky bars that normally trade right at spot price are trading for a couple dollars above. And so that means even if all you did was go to the COMEX and say, give me the 1,000-ounce bars, and then immediately sell them, you'd be able to make $1 to $2. So imagine that, $1,000 to $2,000 per 1,000-ounce bar. You could immediately sell that, and that would be pure profit. You'd have some kind of delivery fees, and you'd have some kind of, but you can do that kind of shuffle in the warehouse. So I suppose there really wouldn't be that much. So, you should be seeing a spike higher in the price. Let's see here. And this is where he goes into that. He says there's all these ounces of silver, meaning those aren't already allocated to the ETFs. Here's the portion. But how much of this 162 million ounces is owned by wealthy individuals and family offices who already have a claim to it? Like I said, the silver that's left may not be available for sale. And so he's going into that whole situation with the SLV that we've covered previously. And I want to check here, see if anybody's in the chat. Guess not. But this is normal. This is my first live stream, so I'm just trying to learn how to do it here, more or less. So, because I was going to do a video on this one way or another, and now I know how to live stream. So maybe if I want to schedule a live stream, I can do that in the future. But get on the Wall Street Bets and check out this data dump. I'm going to go into it a little bit more here while I'm on. Let's see. Oh, here's a big one. There's only 0.36 to 0.52 investment grade ounces of silver per person in the world, if you include small denominations and the 1,000-ounce bars together. So think about that. There's 7 billion people, and if you have 1 ounce of silver in your possession, that's more than your share of the world's available above ground silver in investment form. That's just an amazing figure when it's put into those terms, because it's not very difficult to be a Joe Blow who just wants to save their extra currency from their 9-to-5 job. Might be making $10 or $15 an hour, and you're like, yeah, I can live on on 30% of my income. I can live on 50% of my income, and I want to save or invest the rest of it. Well, if you're making $2,000 a month and you're saving $1,000 a month at current prices, even if you pay a premium, let's do a little math right here. If you've got $1,000 a month to invest, and let's say you end up spending 32 because you're buying generic rounds at retail, right? Well, that means, well, that was $10,000. Whoops. Let's do 1,000. It's a little ambitious, right? So 31.25. So that person is taking 60 times their share of across the human population of silver off the market in a single month with half of their monthly income working a Joe Blow job where they're making $2,000 a month take home, right? So, divide that by, 2,000. Clear. I mean, basically, the point I'm trying to make here is that's not a lot of money. People who make this much money. People who make way much more money than this. So, times 12, right? 2,000, and we're going to do that 12 times a year. But basically, people who are making 25 grand, 50 grand can make a meaningful contribution towards wiping out the available above ground silver stock. And let's see here. Oh, yeah, he's talking about Bitcoin here. Yeah. Hedge funds are pushing silver narrative. I don't believe any of that. This is deep. This is going all the way back to the 1863, the crime of 1863, which is when silver was officially demonetized and the official gold standard was brought in. And that's reaching way back. But really, if you wanted to go back to the start of silver manipulation, that's where you'd have to go, because silver was no longer considered money. Essentially, at that point, I mean, there was silver in money, but it wasn't considered money. It was just something that was there. But anyway, I wanted to bring this to your guys' attention, and I wanted to experiment with the live streaming tools because I'm just sort of getting used to them. And I know this was kind of haphazard, but I want you guys to be on guard for the next couple of days, because we are looking at the expiration month for silver, and maybe I'll get on and answer some questions for folks if I'm able to. But I'm going to keep my eye on it this weekend and see what we open up at on Sunday night, because recently these Sunday nights have been a big deal, and we'll go from there. This is Silver Busters, and I'm going to sign off now. Have a great day, folks.